Welcome back to the Capital Mindset Show. We are live. We are on the road this time. Well, we're just at a hotel. We're not on the road. We're on a little bit of a mini vacation with the family. So I'm going to do a live here. And as always, same policy. You guys can ask whatever you guys want. We can have a conversation about things. Other than that, if you guys share any comments down in the comment section, I'll bring it up, answer some questions. It's been an interesting week. I'm kind of winding down, so tomorrow I'm not going to be pretty active. I did purchase a new speculative stock, but that will have its own video. Not really going to talk about too much here. I might be able to say the ticker, but whatever. But other than that, it's pretty much been same old, same old. Work's been also pretty tough, also managing everything all at once. Even like trying to do some of the stuff on this new iPad was actually interesting to kind of get the features right on some of the software, which was, a bit of a work. Okay, so I know that you guys probably saw the meme craft, if you guys know what I'm talking about, and you guys saw that video on someone else's channel. You guys know what I'm talking about. But I hope you guys enjoyed that video. That video was, for obvious reasons, could not be on this channel. But with the ability to have plausible deniability, and if you guys say what it is, I will confirm nor deny what it was. But yeah, you guys probably saw the Voyager video that I recently did, and there were a lot of Capital Mindset subscribers that were involved in some way, shape, or form in that product, and I'm glad that it's kind of showing out, and a lot of at least the Capital Mindset community that were in it are no longer in those suite of products. They understand more about all the risks associated with that. And I saw a comment in one of the videos. I think it was the newer video, but the person agreed with me because they said that, oh, well, no one's forcing these people to invest. And that wasn't the issue I really had, was that the individuals, look, when you're on and you're making your self public, you have like a sense of responsibility. Like if you think from the moral standpoint, and if you're talking about a product or a suite of products that people who are, to an extent, you're sharing your opinions, right? But then there's the promotional aspect where you're directly having a commercial relationship with that product. And, you should probably, in my opinion, you should highlight that more. So it's like, for example, I wouldn't want to be associated with a product that I don't think I would be using in the first place. And I don't think those guys were necessarily using in the first place. But you see what I'm saying? It gets kind of difficult. And they were, promising 9% returns. At what point do you consider a security? And that's where the morality really steps in. But I did. Because I told you guys that under $160, that's my gulp range. Okay. What would I be if I didn't do it? Okay. So I'm going on a voyage with Voyager. Yes. The affiliate link is down below. I directly profit from Voyager. Absolutely. I bought the dip on Voyager. I was actually asking everyone what they thought yesterday on the Discord regarding the dead cat bounce, and we had a dead cat bounce today, so that was pretty cool. Cheers. I don't have alcohol, just water, fresh water. This is lemon water at least. So, no, it's the second home in Colombia. No, I would show you the room, but like my wife's relaxing over there, so I'm not gonna. Don't worry, sweetie. Do you see the BHAT said that they're issuing new shares to lure in the shorts and then cancel the share offering BHT squared? Wow, that's crazy. No, I didn't see that. That's absolutely insane. You have missed a great story not covering my work. Yeah, I missed that for sure. What'd you send me, sweets? What is this? Oh, okay. Fabio might have missed a great. Yeah. So basically, and all in all, in terms of the portfolio this week, I pretty much just added to some of the other positions. There was some that I'm really questioning whether or not just building like a starter position like 3M, just to start a position, because It's still not at the price point that I like, but it's now lower than it was before. And so we got a bit, you could say lucky, or maybe not lucky, but when we did sell, it was pretty nice. So the other thing I want to, you know what, I'll tell you guys, but there's going to be a dedicated video. So I bought a speculative position in Coupang. And you guys might remember the old video I did when it was about somewhere around $9. And my opinion at the time, you guys can go watch the old video, was that it has de-risked, in my opinion, based on everything that I had seen. It had de-risked. And it is higher now than when I did that video. And I am buying at a higher price than when I did that video, but I don't really think of it as a mistake at all, because it took me some time a little bit to digest, and I'd rather be more certain than anything. And it's in reality, it's still a speculative side of the portfolio. So it's going to be a small position. You'll end up seeing it, I guess, when the portfolio is updated. I need to do a portfolio update video. I just been really busy, so I haven't had the time. But so ticker symbol is CPNG and Coupang. All right, or Coupang. Yeah, the Korean e-commerce, not to be mistaken with Coupang software. Okay, so but the ticker symbol is CPNG, and that one's going to be interesting. It's a little bit of exposure to Asia e-commerce, not C limited. So one thing I'll discuss here, but I'll go into greater detail in the video, is that C limited is a great company and all, but they didn't they didn't make the necessary investments into infrastructure. So their logistics is kind of based off of third parties. And a lot of people don't really know that, or the differences between these businesses. They kind of just see, logistics or e-commerce business there, e-commerce business there. They're all the same thing. They're all e-commerce. No, they're all kind of different. They've all made different investments over the years, and some to the benefit, some to the detriment. C Limited hasn't made those necessary investments. So you can kind of see in a time period where costs of logistics start to rise, they're a little bit more exposed to that. While Coupang really isn't. What's another one? Amazon isn't. Mercado Libre isn't. All those companies have made the necessary investments in their respective markets. And I believe last time I checked, and I checked this out when I looked at the Coupang in that video, and nothing really has changed, because obviously, if anything, it's gotten better. They have really good coverage within their market. They dominate the Korean market, and within the Korean market, they don't necessarily need to dominate the rest of Asia. They just need to dominate the Korean market. And if they focus on that, that's great. I mean, the call option there would be a unification of Korea. It's not going to happen anytime soon, but that'd be pretty awesome, because we could have like a Germany moment where North Korea and South Korea, North Korea will hopefully develop. That could be a nice little small, large economy. Like when I say small, I mean geographically small. But yeah, that's pretty much the new company that's going to be showing up. That's going to again show up in a video. There is a video coming out tomorrow that I pre-recorded, so keep an eye out for that one. That's going to release in the morning. So, Bobby, to live at the end of the rainbow because your cash seems unlimited with all the nibbles and gulps. Well, no, remember that the cash pile that I have, and yeah, I have cash that keeps coming in, so I have to redeploy and deploy in excess of what I don't need for day to day or any other things that we're doing. So, oh yes, the jewel ban, yeah, that happened for Altria. So for those of you who may be invested in Altria, ticker symbol MO, they just actually banned Juul, and so the FDA issued the proclamation. So that's going to be interesting how that really affects the company. The company's value for Juul was already down to about $1 billion. They paid about $12 billion in cash, so they wrote it down. So they basically had a goodwill impairment for a while, and I think they wrote it down all the way to $1 billion. Juul as a company isn't really profitable. Last time I checked, I believe they lose about $100 million a year, and Altria was kind of in that desperate phase to try to find what the industry calls is the actual terminology is what is it? Lower risk product, de-risked product, something like that, but lower risk product. So instead of combustion-based products, it's vapor-based products. So you guys probably might know IQOS. I don't use any of their products whatsoever. I don't use dip. I don't use vaping. I actually never really vaped, and so I understand that there's a group that desires it. It's a big market and it's a recurring business, you could say, because of its addictive properties. But regardless, that's kind of out of the window. And so Altria has to figure out another way. The only problem is their sister company, Philip Morris, has had a little bit of a problem. Not they have had a problem. They've had a problem with Philip Morris because Philip Morris has acquired another entity in Europe, and that actually does business within the United States, which kind of threatens the IQOS agreement that they have with Altria, and Altria really doesn't have anything else after that. Altria still has that ownership. I believe it's 10% of Anheuser-Busch. So yeah, you can see, Chinese vapes. A lot of people kind of moved away from Juul. Juul really suffered tremendously in the United States, at least. I'll speak to the United States from the that marketing fiasco that they had in reality, because whether or not you looked at the data, the market or the people kind of looked at Juul and said they're going to get popcorn lung, when in reality it was a specific chemical being laced in some of the products that other people were selling or third party was selling, but it still got associated with them by the consumer, which was a bit of a problem. And yeah, so going back to this though, Altria looks like it has a juicy yield. I think all in all, if I had to guess, I believe it's been de-risked a bit. Okay, so I think you just have to look at Altria like a cash cow. I believe they have a negative shareholders equity, but you have to understand with a company like that, they're going to have a negative shareholders equity. Well, for the most part, you can think of it like this. I'm oversimplifying it, but the company like that wants to get cash out of its books and onto your hands, and when it gets to you, it's okay as long as it's not on their hands. That kind of mitigates the risk of someone wanting to come after them. That's kind of how you can think about it. So it's just a cash cow. In reality, that's how I'd really put it. It's a cash cow business. But yes. Oh yeah. After you go down the rabbit hole, you can't really come back. And every time you hear someone say the Federal Reserve is doing rates, you're going to be that nerd who's just sitting there and going, no. So yeah, that's pretty much it. But yeah, Facebook's or Meta has been not doing so hot as of late. While even Google on one day, my portfolio was doing pretty good one day because Google was up nicely, but Facebook was not. I think Facebook went almost exactly in the opposite direction in, I think it was Wednesday or Tuesday, one of those days. I think it was actually Tuesday. But yeah, that's been pretty interesting moves. I've also been looking really more closely at other smaller niche industrials. I think industrial, there's going to be a lot of opportunity as the market starts to price in the actual slowdown that we're seeing. But my thoughts on Bud is that Bud has been kind of ruined by 3G Capital. The brands that they have are extensive. The brand are deep and they're also wide. So they have an absolute monstrous brand portfolio. But the beer industry is pretty difficult. You have a lot of acquired taste craft beers here and there that make it interesting to say the least in order to compete. And they had to make that agreement with Constellation Brands, ticker symbol STZ. If you actually take a look at STZ, they're the ones who own Corona Modelo within the United States, or they own the rights to. This actually came from litigation back in the day when Anheuser-Busch, basically they were too big and they were forced to give that. But if you buy Corona or Modelo outside of the United States, that's still Anheuser-Busch. Anheuser-Busch or AnBev or AB InBev, BUD. Let's use ticker symbol BUD. Big company. It's big everywhere, even in Brazil. Brazil, they have tons of drinks. I mean, you talk to any Brazilian. But yeah, it's I'd say that the problem with them is it's a very difficult market. It's a very difficult industry to really compete in. They have to continually acquire new brands, develop new brands. Any old city can come up with their own craft beer and it could blow up, and that you've got to kind of compete with them in that way. So you have SAM or ticker symbol SAM, Samuel Adams, which is competing harshly. You have, well, actually, you don't really have that many publicly traded beer companies anymore. You really only have BUD, TAP, SAM, Diageo is more hard drinks, STZ. Those are the ones I can remember off the top of my head, at least in the American market. But yeah, Anheuser-Busch or BUD is actually 10% owned by Altria. Fun fact. Altria and Philip Morris used to own a lot of companies that they spun out over the years, but many people don't know that. So yeah, they are. I think if they focus on that, they can. My only problem is their competitors aren't as leveraged as they are, which spells opportunity for them. and a problem for Anheuser-Busch. So because you have to keep making the necessary investments to keep up, you can't just allow them to just continue and to just like, oh, we're just gonna hold off for another. So let's see here, Coke and Jack. Yeah, man. Hey, anytime, Ben. Thank you for checking me out, and welcome to the community. Sam is interesting, but would only be a buy around $250 a share. I'd probably say that. I haven't checked out Sam in a long time. I think I have a video on Sam a while ago. At the time, I said it was overvalued. I think it's a lot lower than it was then. Probably still overvalued a little bit. But yeah, Fabio, do you think the scammers are part? Fabio, do you think scammers are part of the price for free market since value is subjective? However, I do think capitalists should be motivated to root them out. But I do think they are in a way motivated to root them out because, I know that there is. Okay, so I think that, and I said this to Chris the other day, like I do think that the open marketplace for ideas does actually win out as long as you have parties that are willing to engage in discussion and hold true to those principles. And I think the audience, you guys are basically the consumer at the end of the day. Let's face it, that's the reality. You guys are the consumer. So you guys are all voting in a way. So when you choose to vote in one direction or another, and I'm talking about in terms of your wallets, in terms of your viewership, you're basically deciding where is what's getting rewarded, what kind of behavior is getting rewarded. So when you watch a financial education Jeremy video, you reward that behavior, regardless if you actually hate him or not. You reward the behavior. You watch, I don't know, whatever the other one, Stockmo. You watch Stockmo, you reward that behavior. You watch Strongman, you reward that behavior. Exactly. So like you guys are the voters at the end of the day. And so if you are presented with everything, it's up to you guys to then say, okay, well, that's what I want to be, for there to be more of. There you go. And then you basically put your attention span there, and then that propagates that content further and further and further. And I think that as long as someone is trying at least to provide value, that's philosophically, I could just be completely wrong. And, because Strongman always jokes with me and says in a cynical way that the way you grow on YouTube is you just pump out trash stocks. Basically, what that means, if we break that comment down, is like, don't provide any value. just oversimplify things and make loud noises and jingle the keys and make sure that the people are happy. And it's like, okay, like he doesn't actually like say it that way. I'm just like breaking down that comment that's basically like what that means. But I think, and he thinks too, like, because obviously he's trying, right? So if you believe that you're providing value and you just propagate out that value, hopefully it's reciprocated well. So I think they are in a way motivated to move them out. People losing money in such a way can be seen as malinvestment and may hurt the economy. Agree? I mean, the thing is, you can view it as malinvestment, except malinvestment is more like you actually can, but it's a little bit trickier because malinvestment is almost something exclusive to a party that has no economic interest. So like people actually will do what it is that they want to do. And that doesn't necessarily mean that that's malinvestment, because that's what you decided to do. So it's like me saying, I think what you're doing is malinvestment, therefore I need to decide what you want to do. And then I'm going to decide for you, because then if I tell you, you're going to go to the beach on Tuesday, but you want to go to the beach on Wednesday, okay, that's going to be malinvestment, because I'm forcing the action onto the market. Like I'm forcing you, a free market participant, to do something that you otherwise would not do. And so maybe I force you to go to the beach on a different day. And I'm oversimplifying the example, but let's say you don't even want to go to the beach and I force you to go to the beach. Or let's say you want to go to the beach and I force you not to go to the beach. You see what I'm saying? That's more like what causes malinvestment. Heineken's going. Heineken's publicly traded European, but they do really well in the United States. They're very popular. Almost forgot about them. Thank you. Is it true that alcohol companies do well in a recession? I mean, generally speaking, they're not hit as hard because people, the theory that, and I think it's almost like a cynical theory, is that people get depressed during a depression, they buy more alcohol. So, they just don't get hit as hard, or the sales volume don't get hit. They can still get hit, but not maybe as hard. They're like a consumer non-cyclical in that way. Does Bank of America have good customer support? Currently use Discover. Yeah, they have pretty good customer support. I'll tell you this. Fun story. This is a fun story. You guys won't hear this one. All right. So I'm going to tell them the story of the bag, sweetie. Remember that story? The story of the bag. What happened with the credit card and everything? I think it's a funny story because nothing bad happened. All right. So, but so one time I purchased for my wife a present. It was a bag, and it was a bag of, you know, a cost that would make, yeah, don't worry, I won't take the cost, but a cost that would normally someone would worry about, right? If it went missing, you would really care. Okay, so I was working on my one of my my jet ski. I was working on my jet ski, and my friend was over, and we were working on the engine because something was kind of off, and it was a two-stroke. It's a two-stroke engine, and so we're working on it, and I'm just telling you, I'm spoiling it to you guys. It gets delivered, but I'm completely like not mentally there, and I signed for it and everything, and we put it in the garage. We just literally put it in there, and I don't really see where it is. And so a week later passes by, or 2 weeks later, and then my wife goes like, you know, hey, did that package arrive? And I'm like, oh yeah, I forgot. And I check my email, and it says, oh, it delivered. And I'm just like, what the heck? It delivered. Oh my gosh, it's not here. And it's like, okay, you know, then we went through this whole thing, right? And I was like, you know, having to file like a report and stuff. But then I did find it in the end. But the point is, for your question, Bank of America, when I told them, hey, you know, like someone's, you know, stole it, boom, they pulled it immediately. They actually like trusted me immediately. I had to recall them and then tell them, hey, no, I found it in my garage. I'm stupid. You know, put the charge back on the card. But they did that instantaneously. And it was reassuring to know that if that were to happen to me, I'd be covered. Now, I don't know. I maybe that was the person who helped me, but I've only had good experiences with Bank of America. I've had good experiences with JP Morgan Chase, really good experiences there too. I really haven't had a single bad experience I mean, I don't bank at really many banks, but I don't have a bank account at every bank. But I imagine that there are bad experiences at some banks. I can tell you that my mother told me something about that she had an issue with Capital One, but it was resolved afterwards. But she had a decent amount of issues that she had to keep calling when she was in Europe to say, hey, like it's me, it's not someone else. And then they, you know, would have to do it over and over and over again. I was like, oh, you know, whatever. But yeah, I don't really know too much about a lot of other banks. Have you visited Intel since it dropped into the mid to high 30s? Yeah, I'm going to revisit Intel. I think Intel's at a price point where it might actually look pretty interesting, if I'm being honest. Maybe it's de-risked a lot. And so I'm going to probably take another look at Intel because you're probably asking because my thoughts were on Intel that I thought at the time it would underperform. That's why I sold it. And it was in the 50s at that time when I made that video. And now it's in the 30s. So now, because I also said based on the price, you know, if the price is low enough, it's pretty good. Now, I'm probably going to look pretty, if I look at it now, I'm probably going to get interested in it because I think a lot less has to go well in order for it to be successful, but we'll have to see. Like if everything I looked at before is true today, then I'd probably be pretty interested. And I know that Strongman bought it. I think what he did was, it's probably going to be end up a good decision. I have no plans on adding Intel to my portfolio yet, but that could be something. It could replace the material stocks that just recently went out. All the semiconductors are pretty much getting kind of thrashed right now. But I'll be honest, I would prefer AMD at the right price presently, but Intel has some optionality that if they improve on certain key aspects, that they're going to do pretty well too, such as their fabrication facilities, etc. So have you talked about REV going bankrupt and 5x cents? I'm not sure. No, I haven't talked about REV. REV, this stock is Revlon. Oh yeah, Revlon. That's right, Revlon. So Revlon, it's not that they were actually going bankrupt. It was Chapter 11 bankruptcy protection, I believe. Yeah, I believe they filed for Chapter 11 bankruptcy protection. So basically, they're in agreement with their debtors because of their operational disadvantage that they had with their supply chain. I remember reading it or looking into it, and apparently, like they were negotiating with their lenders because 1 in 3 of orders could not be fulfilled, something crazy like that. So they had the demand, they had the sales, but they could not generate well, they could not finish. They could not comply with the sales because the supply chains were destroyed essentially. So that's basically what they're trying to say, and the lenders were pretty much okay with that. All right, capital mindset. To give better context to your public portfolio, what are your long-term financial goals? Early retirement, billionaire. I mean, yeah, that should be everyone's, I guess. We know investing in personal and should be performed as such. Oh, should be performed as such. Okay, so for me personally, it's pretty much just I don't know, just growing the wealth to the point where for me that the assets can basically provide me a comfortable life where I don't have to stress ever about anything. Okay, that's pretty much the goal, but I think that's everyone's goal. It's like a pretty generic goal. If it gets to billionaire, cool, that's great. I'd love that. Early retirement, I wouldn't really retire early. I like to work. My wife can tell. I can probably say that. Yeah, she's like, yeah, I like to work. I'm not going to retire early. So I'm going to be working because also when you retire early, you know, when you retire, you like degrade faster, by the way, because you don't have like some sort of like purpose almost. But, you know, you try to find something that you feel content doing. I don't plan on retiring early. The problem isn't whether Jeremy is wrong or really wrong. The problem is how much people lose from following his advice. Markets which learn. Yeah, I would agree with that. What do you think about cannabis stocks like Truly? Okay, but the thing is, I think that's too early. I think that first I would like to see what the United States legislation does in that direction. I think that people were, I mean, quite obviously, because now we can say, and it's obvious, it's like, duh, Fabio, obviously that's the case. But I think at the time people were really overly excited about these stocks, and they did not really, they didn't really know what they were buying or what the risks were at the time. I think that there was an interesting, some people had some interesting ideas as maybe playing the real estate, such as Innovation Properties Trust. But even then, you know, it's a little bit difficult because the problem with cannabis is that, you know, you can't get loans if you're a cannabis company. You actually learn that you definitely do learn that in your business law class back in those days. But the cannabis industry, and I don't think that's changed, cannot currently get loans. They can't even get business credit cards. They're basically a cash business, which heavily restricts their ability to grow. But, you know, and that speaking of cannabis stocks, you know, there's a stock that our favorite creator was also pumping. And I think that's absolutely egregious to the point where that's getting on the line of maybe illegal. I don't know. I really don't know, because that one's a market cap of what, like $50 million. I don't even want to say the name because I don't even want to talk about it. Okay. And I'm only at we're approaching 2.8K, but almost 2.8K channel. And I still don't even want to talk about that stock. Yeah. So you can imagine if someone was a 700, nearly million subscriber count YouTube channel talking about it. Okay. Technically, Fabio, I found your channel because of me, Kevin. Really? Wait, how did you find it because of me, Kevin? He never spoke about me, or maybe you saw on the recommendations. Don't find. I was trying to, yeah. Ticker terminal. No, I don't. Wait, that's not for me. Good experiences with Wells Fargo. Here we go. Another perspective. I asked because Discover has 24/7 US-based customer support. That's why if I switch, I want to make sure I'm not sacrificing. Well, you can actually see if they do have, but I'm pretty sure Bank of America does. Not Merrill. I don't think Merrill has that, but I think Bank of America for credit card. Yes, we're talking about credit card. What are your thoughts on Pepsi stock? Pepsi stock, I think, is overvalued, but I think that to the point where everyone understands that Pepsi is such a solid business, and that's what happens. So when the market understands as a whole that a business is great, right? It's going to be priced for that greatness. It's not going to give it to you for free. So Pepsi, I forget what they're trading at right now, but I'm pretty sure, I'm 99% sure that Pepsi right now is trading on the expensive side, even to historical standards. But everyone's kind of looking at Pepsi as kind of like that stable stalwart in any market condition. And if you actually look at Pepsi's portfolio of products, they don't really suffer too much. And the company's really well run, really well capitalized. So yes. Yeah, Noam. Yeah, the sick on the go setup. Yes, it is. I mean, it's a makeshift setup, like the cameras. We don't have the lighting, but not as professional as when we're in the studio. But it does well. It's kind of like when I do those unprofessional backyard live streams with you guys. Yeah, but a little bit less just in the hotel. Okay, imagine if I did this in the hotel lobby and people were just like, look at this wacko. This is what's wrong with this generation. Just like in the hotel lobby, just like talking it up to the camera, just like having conversations with myself. That's basically what you're doing when you're in a live stream. Even though like I'm having conversations, but I'm reading, comments. I'm not having a verbal conversation with another person. But yes. Okay, so do you have an EU bank you like? Some examples: BNP Paribas, ING, HSBC, Credit Suisse. No, I don't have any myself. I don't have any right now in a EU bank, but I'm not really opposed to it. Okay, so I can't really comment on that. But what I would probably look for is very similar aspects. So I would like to have an in-house broker in my bank. I like that seamless ability to transfer capital back and forth. I like that if they reward you more for growing with them, as in the more capital you have with them, the better they treat you, the better they offer you different services. I like to find that if that is a possibility. So those are characteristics that I look for in a bank. For example, Chase has that aspect. I'm pretty sure most banks, but like Chase has a really cool aspect. So Chase Private Client, and you have with Bank of America, you have the premium reward system. I wish Chase would do the premium reward system, but for Chase, so that you get those boosts on the credit card, but you don't. And so, like, technically speaking, again, we're getting to credit cards here. Bank of America is kind of like the end game credit card, where a lot of their cards become pretty amazing with no annual fee, which I love. Okay, of course, use responsibly. So yes, you want a recession resistant stock like McDonald's. I sleep like a bit. Yeah, you see, like that's actually a very good point, Dan, because McDonald's. So when you get to a certain point in life, that's actually where I would also probably really appreciate those aspects. You're seeing that actually evolution with the YouTube channel PPC Ian, which he focuses only on dividend stocks. And remember, I how do I say this? I admire that strategy. I don't like completely poo-poo on that strategy, because I see that a lot of those investors who are dividend investors, they end up caring more about the fundamentals. And it's a different psychology, and it works for them. So all well and good. If you are that investor, all well and good. You won't hear me ever saying like, oh, that's terrible way of investing. No. To the contrary, I think that everyone needs to find their style. And so you see his evolution now, and that's why I'm highlighting this. You actually see his evolution. He's got kids. His kids, I think, are approaching 10 years old, something like that. And he's transitioning more to those sleep better at night stocks. For me, and also depends on where you are in terms of your career. Are you having more and more income coming in, or is that kind of slowing down? You're edging closer towards retirement. That all transitions into kind of like that strategy. But yeah, people like, I had a friend whose family had an insane amount of McDonald's stock and they inherited it from the grandfather. And I was just sitting there. That's one of the first things I ever got exposed to with learning about stocks. This was when I was young Fabio, and the family, or my friend and his family, were telling me all about this. And it was like, stocks, you can buy these things and they pay you. And this was way back. I don't know what McDonald's, I don't even know how much that is worth now, but they've held that McDonald's stock for a very long time. And yeah, I know it was a cool experience. So like, they were basically making stupid amounts of money from just the dividend, which was awesome. And then I was like, wow, you get a raise from so I learned that stuff pretty young. It was cool. All right, what do you think of the Kellogg breaking up the company? I think overall, I think that's going to unlock some value, maybe. But the thing is, I understand why people are skeptical, because what's going on? What about the synergies as a whole, right? But they're trying to say, okay, well, the market's not pricing in the different assets that we hold. They're kind of comparing it to the other assets. So like, we have slow growing businesses, fast growing businesses, cash cow businesses. Well, those are the slow growing ones. So I'd say that's what Kellogg's is trying to do. So they have the vegan snack and cereal. They're trying to see if the market's going to price that up and hopefully unlock value for shareholders. They've done this in the past. A lot of companies have done this in the past. Last time I spoke about this, I mentioned United Technologies did this with Otis and Carrier. I participated in Carrier and Raytheon Technologies. Raytheon merged with United Technologies to become Raytheon Technologies. And then again, spun off Otis and Carrier. I had, did I say I had Carrier? The Carrier is the one I did not have. It was Otis. All right. So but all of them did well. So the value was technically unlocked. And I remember the investor base was kind of split on whether or not that shift should happen or not. So, oh no, thank you for finding value, responding back. It's cool. I got a cool hobby. So one thing I like to do is, stand up jet skis. So yeah, I have a group of friends. We all go out and stand up jet skis on the lake. We don't like. I don't like to take them out into the ocean, because first of all, salt water into the jet ski, bad. Let's just equal salt water equal bad, and so I like to keep it more in fresh water. And I live by nice group of lakes. Well, there's a lot of lakes in Central Florida. A lot of lakes. But yeah, I like stand-up jet skis. So if you actually look up a picture of them, that's basically what they are like. Not the ones that flip. Every time I bring it out, people always ask, do a backflip. And I'm like, you know how heavy this thing is? This one's not meant for backflips. So there's ones that are meant for backflips, ones that are meant for, racing, asylums, horses. That's what I have. I have an SXR 800. You guys can probably look that up. That's the one I go when I'm just with like my group of friends that have those as well. I worded my question poorly. I didn't mean that neoclassic lease lending leads to savings. Oh, I didn't even see your question then. I will pee. Oh, here it is. Oh, wait. Okay, so I don't know how that can, wait. I worded my question poorly. I didn't mean that neoclassical beliefs lending leads to. Is this towards me? I don't know where the first part was. Oh, it was this one. Okay, sorry, I didn't see that one. Given the credit theory of money, the traditional neoclassical economists were wrong in that borrowing actually leads to savings. Well, the thing is, okay, so economics has always been kind of like a soft science. So it's always developing ideas. But yeah, so let me go back to this question. So I worded my question poorly. I didn't mean that neoclassical believes lending leads to savings. Okay. So that's where that concept. Oh, see, sorry, I apologize. It just took me all the way to the bottom. So now I have to find where I was. But yeah, let's see if, well, I'll let you kind of like finish. Okay, no. So my thoughts on it all in all, and I'll kind of separate it from this, is that in a way, but not really, because when you understand how the modern banking system works, from the modern banking system, savings doesn't necessarily lead, or it doesn't lead necessarily to lending, right? Savings doesn't necessarily lead to lending, but the way you word it, I'm actually going to kind of counter that. In a way, lending can lead to some savings because your lending goes into the economy to some other form, and that's someone else's income, which is someone else's savings. So, I'll kind of correct it like that. But I kind of elaborate your question, then I can get there more. Mindset, you interested in buying Wells Fargo or JP Morgan? So more JP Morgan, because I want to add because my trifecta was, well, actually, I did have Wells Fargo, but I had Bank of America, JP Morgan, and Bank of New York Mellon, which were the two banks. So 3 banks, sorry. And that was my trifecta. And then I had Citigroup and Wells Fargo in the portfolio back when the bank crisis happened. But yeah, not bank crisis. It wasn't a bank crisis. I don't know why I just said that. It was 2020, March 2020. Thing happened. There was a time, you actually look at the banks. There was actually a lot of opportunities to buy the banks at that time. They were kind of stagnant. So if we enter into a recession, how Magna perform? Not good as a business, but no, not chance of bankruptcy. My opinion. That's my opinion. I could be wrong. My opinion, no chance of bankruptcy. Well, okay, how bad is the recession? Is everyone literally out of a job? Maybe. All right, how do you calculate margin of safety for stocks? The thing is, every single company will have a different margin of safety requirement. And the investor has their own margin of safety requirement. So it differentiates itself on investor and on industry. It's not a one size fits all. You can't apply the same margin of safety to every single situation. If I told you a margin of safety, that might not be correct for you. Might not be correct for your friend, might not be correct for your parents, your children, etc. So it's very situational. I studied at a local university, actually, at the University of Central Florida. For a long time, I've only used U.S. broad market ETFs and developed world ETF. Do you think I'm nuts to avoid emerging market ETFs? No, you're not, because in my opinion, a lot of the assets held in there are kind of questionable, and that's those Chinese VIEs. So that's basically why I'd rather like pick and choose certain countries, if anything. But but that's my opinion. Some people say they would choose emerging markets because they do want exposure to those Chinese VIEs. But that's just differences of opinion there. Thoughts on Charles Schwab? Would you never buy? Would you ever? Oh yeah, I actually would buy Charles Schwab. Charles Schwab makes a ton of money actually from those. So they're actually beneficiary from rising interest rates. Remember when I told you guys, and some of you guys are new, some of your names I've never seen before, and I'm pretty good at remembering written names, not remembering verbal names, which is a fun fact. But some of the names I'm seeing that are new, so I'm going to repeat something I've said in the past, and that is banks do not make money necessarily from rising rates. A lot of people think that. And people were probably buying up banks during when I was talking about the liquidity crunch and where rates were going to rise. And people were always asking me, oh, should we buy banks? Buy banks. And then I think there were a lot of decent amount of creators. You guys can confirm or deny this, but I'm pretty sure there were a lot of creators when the Federal Reserve was saying they were going to raise rates. They've been saying they were going to raise rates since about October, by the way. But they were saying the companies you want to buy are the banks. Take a look at all the bank stocks, how they've been doing since October-ish. And so any person who's said that, I don't want to like poo-poo on them, but like, you know what I mean? The reason why they were wrong is because that's not necessarily the case. It's not so simple that, interest rate higher equal bank make more money. It's more complex than that. Charles Schwab, on the other hand, actually, by the way, which gets lumped in with the other banks, but there's more than one key component of Charles Schwab, but one of their interesting components it's a big size of them, is that excess cash that you keep kind of unsettled, that's not moving in your brokerage accounts, all that money that you just have sitting there. Well, they actually lend that out in the short-term market, and then they can generate some yield. So if rates actually rise, they actually stand to benefit in that business. Interactive Brokers does the same thing. A lot of these other companies do the same thing. But there you go. All right, Fabio, drop the gems already. What books do you recommend for fundamental analysis? Actually, I think that, well, the thing is, like, a lot of books are more like philosophical with fundamental analysis than anything. They're not like telling you, that's something like you get, I guess you more like pick up. But for fundamental analysis, that, I always forget his name because I can never pronounce it, but I actually have it here on my Kindle. Let me see here, my Kindle app. This book, let me pull it up. Give me a second. Kindle. Oh, the app is not on my phone for some reason. But anyways, it's the Dean Evaluation. He has a book. I think it's like $15 on Amazon or something like that. It's pretty cheap. It's the one that's cost $15. So just look up his name, Dean Evaluation. I can never pronounce his name, so I'm not even going to try. Decent book. I actually just finished reading it. But again, mainly books like that are more going to be more philosophical. They're not going to handhold you through evaluation, really. And they're kind of going to be more like academic. What do you mean by scammers cause money destruction? Capital money. I see what you mean, but let's say scammers cause money destruction on a wider scale to way more people, like Bernie Madoff, 100x. Could that turn into malinvestment? Well, no, because technically speaking, that was money that was spent in some capacity. It wasn't. Well, I see where you're going with it, though. Okay, hold on. Like my brain's kind of trying to catch up to it. So, if we have a Bernie Madoff situation, let's try to reason out the flow of money. So investors with capital, they decide to put their money into a stock, and that stock, okay, does what? Well, you bought the stock. That stock then, see, because this is what we're kind of describing. You bought the stock. Well, you bought it from who? You bought it from someone. You bought it from some random person you've never met. Now that person has the money. The money wasn't destroyed. You just paid for it. You bought someone else's money. So you came to the market. You're like, okay, I'm going to follow the scammer. The scammer's going to tell me to. Let's just go with this argument. The scammer says, oh, buy the stock because they're doing a pump and dump. The stock, you buy the stock. Well, who'd you buy it from? You bought it from someone. That someone has money. Did that money just disappear? Did that $5 or whatever I said, $10 just disappear? No, it's in someone else's hands. So the malinvestment was it used to allocate resources to where they shouldn't be? I don't see it in that specific situation, but I can see where you're going with it. So like, let's say, we do a scam that the money's just gone. it's leaving the country. Yeah, that could be problematic if it's like big enough. Yeah, it could be problematic. I mean, it's problematic in any case, because if you scam enough people, you can cause discouragement of investment, which can be problematic. Like, let's say if there's something that big and then the population just like as a whole says, I'm not going to even participate in markets. I'm not even going to invest. Yeah, that's going to be a problem, because then you have less market participants. You have less people kind of participating in that voting system of sorts to say, where do the assets get allocated to? So I can see that. Can't be a scam, investment, non-performing asset. Yeah, okay, so like then we're getting to like a different kind of scam. So like a scam, like, you think your money's going to something and it's actually just being taken. Yeah, if it's that large, I mean, where is it going? What is it being used for? Yeah. What is a good price for paper? And by the way, not to get cheeky with this, but some argue that like that's kind of like what the government does is in terms of taking your money and then spending it on things you would never spend it on. Or things that wasting your money. That some things that's like a scam, and they're like you're forced to give them the money. Not the same thing, but you know what I mean. All right, so in execution, it might end up being somewhat same, but not the same, because you can't blanket and say all government spending is completely wasteful. There's a lot of waste, but not all. But yeah, it is redirecting resources, and so yes. What is a good price for PayPal? I know you did a review 4 months ago. Currently different because of Apple Pay. No, it wouldn't be really different. I looked at PayPal. PayPal, there's room for everyone in this industry. So I think that even if Apple Pay becomes super successful, it's not going to completely wipe the floor with PayPal. And speaking of which, Venmo just messaged me. So speaking of PayPal, look at that. Almost makes me feel like the phone's listening. It probably is. Capital mindset chase private client is stupid. Yeah, you see it. Yeah, I know. That's the thing. I wish they would change it to something that's more useful, something that like I can actually feel tangible benefits to. Like, okay, they're like, oh, you get to talk to this banker and you get like your safety deposit box. And I'm like, all right, like at Bank of America, I actually get reductions on mortgage loans. I get reduction on car loans. I get reduction on a variety of things. I get boosts on cashback. So you see, guys, I'm sponsored by Bank of America. Please check the affiliate link that doesn't exist down below and use the name Fabio at Capital Mindset. And then you get $0 in benefits. Just do it. All right, Capital Mindset, thoughts on asset managers. Oh, I've been being asked by asset managers. They look cheap now because the market's kind of pricing in that there's going to be kind of a slowdown in the asset management space. But if the one I'd probably love to have again, because I actually sold it, and in hindsight, it was good. It was good to sell. So was Brookfield Asset Management, and Brookfield Asset Management's my favorite asset manager, but for a variety of reasons. My mindset. Oh, whoa. Okay, so this is going. Oh wait, I almost skipped. Sorry, I almost skipped a bunch of things that took me down. Don't want to do that. What happened to oil stocks today? Your thoughts? So is oil up or down? I don't pay attention to oil too much because I don't have any oil stocks anymore. So I'm kind of just chilling with oil. Oil's been in the portfolio for almost 2 years. No, has been. Yeah, we're in 20. Yeah, almost 2 years. Wow, look at that. Yeah. So wow, look at that. Woo! I timed I timed the oil market, boys. No, I'm kidding. Watch it skyrocket like 50% tomorrow. Then I'll cry. But no, oil. Remember, and I've been saying this for quite some time. You can ask the other subscribers what I've been saying about oil. It's oil. You got to be careful. A lot of people were telling you to buy oil, or a lot of the media was telling you to buy oil, for lack of a better term. And the thing is, the time to buy oil was when oil was hated. And when oil prices are like this, the consumer gets squeezed because you have discretionary spending, and you have let's just call it necessities. You have necessities food, shelter, energy. Well, there's energy. And so if the consumer gets squeezed, eventually the consumers reject higher prices because they just can't afford it, because wages aren't growing fast enough, et cetera. And then you have another aspect, which take a look, and for you who asked this, just take a look at the industrial stocks. What do you see with the industrial stocks? Because I like to sometimes just ask you a question and then get a feedback. But you're probably watching this. I won't wait for your comment. As you're typing in the industrial stocks, like I don't know, just look up some of these: LYB, DOW, so Dow Inc. Be careful when you type in Dow stock on Google, because it'll take you to the Dow Jones Industrial. Make sure to do Dow Inc. stock, and it'll come up. But Dow Inc. stock is another one. So what have they been doing recently? Well, they've been coming down. Why? Let's ask that question. Let's unpack that for a second. And okay, well, because demand's drying up, inventory levels have come down. I'm kind of just giving you this backdrop information. Inventory levels or inventory order levels are coming down. And what does that mean? Okay, well, that means that the consumers at some point, the sellers of products, they're anticipating lowering demand. So they're anticipating lower demand, or they took on more inventory. In either case, the production is coming down. If production is coming down, what does that mean then? Well, okay, let's unpack that. If production is coming down, then demand for inputs will go down. Well, what are some inputs that go into the production? Okay, well, we have energy, which is a big one. It's one of the biggest ones. And so if energy is coming down on a big scale, well, there you go. Market's going to price that in. Market's going to say, okay, energy is probably going to come down lower. Similar to what happened in 2008, by the way. Same thing. So not really a new thought, but you're asking me, so maybe new for you. And so welcome to the Capital Mindset community. So now you are up to date, and everyone else who was asking, that question is also up to date. Okay, so Capital Mindset. Have you ever thought of a stock trading below liquidation value, aka OG Warren Buffett style? I mean, it's very difficult. Cigarette butt investing is very difficult. I have had like arbitrage, not arbitrage, because that's like the wrong word for it. But I've had invested in some stocks in the past, like Dell, because of their investment in BMW and the valuation of BMW relative to Dell. Like they owned 80% of BMW at the time. And it turned out well, by the way. So spoiler alert, if you actually look at Dell stock, it turned out pretty well. And they actually spun out BMW as well. So you had basically BMW under the hood. You got basically Dell stock for free. And this was way back in the day, actually. This was like 2018, 2019 years. And anyways, the BMW was basically the totality of BMW that they owned was worth more than the entirety of Dell, which was a funny, little error in the market. But the market was kind of traumatized from Dell because Dell went private earlier in the teens, like just after the financial crisis around there. And so investors kind of had a bad taste in their mouth. So I think that they were kind of like scarred, because I call it like industry scarring, but I think there can also be like company scarring where the market's like, no. Is Intel a value trap? I don't think so necessarily. It could be. I have to take another look at it. Any thoughts on Oxy? Buffett seems to like it. Yeah, Buffett seemed to like it, but remember, Buffett invested it through its debt and through its stock recently, but initially through its debt. So he kind of actually missed the run up. But remember that he's probably looking at things a little bit differently. Look at his size relative to the rest of his portfolio, and that should tell you his risk profile with Occidental Petroleum. So if he's wrong, he's and he can be wrong. Buffett's not, always right. I want to actually be clear to say that Buffett is not always right, and I know that's controversial to say, but he could be wrong. Like look at the airlines. The airlines were wrong, but that doesn't mean he's bad. It's just he can be wrong. People can be wrong. I can be wrong. Everyone can be wrong. Every single person can be wrong, even Buffett. All right. So I know that he has like an aura of perfection, but we have to remind ourselves that he is also human. I never seen someone outwardly suffering while on a jet ski. Well, I don't know if I outwardly suffer, but yeah. At what point do you think dilution should be a red flag? If it's getting to the point where pretty much, it's growing, if the dilution rate is close or faster than the growth. It's a pretty easy one to answer there. Capital Mindset, which continent do you think the next World Cup, South America or Europe? Where? Brazil? Yeah, South America. There you go. I have to say it. If I said otherwise, she'd get me. Capital Mindset, what I meant was this: typical neoclassical. Okay, so here it is. Typical neoclassicals take is that savings gives lending. Yes. Okay. Yes. Yeah. But if banks don't look at reserves when lending, and just create money out of thin air. Yeah. So that's what I'm saying. Like, yes, because neoclassical is operating under a different system. So capital mindset. So no savings is required. This borrowing leads to savings, not the other way around. Yes. Yeah. Exactly. It's not required. No, but I don't want you to actually think that too, because no, technically not necessarily, because you need collateral. So you actually need to accumulate collateral to kind of back up the lending, because if you lend out too much and then you get, people don't pay you back, then you're over leveraged. Your book's going to go to zero. So you have a bit of a problem. So to an extent, right? To an extent. Capital mindset isn't Bank of New York Mellon, pro-million asset management company. What was the thesis? Why you like them? Just undervalued, well-run bank. And at the time when they were acquired in the portfolio. Okay. I'm not looking to buy back Bank of New York Mellon. I know I said they were like the trifecta that I had, but I'm not really looking to, I'm not too excited. Like, they're the least excited. All right. I'm more excited to buy JP Morgan and Bank of America, and I'm happy with that. I want primarily primary deals. Hey, you know what? If I'm being honest, like I'd also buy Wells Fargo. Wells Fargo is kind of hated, but Wells Fargo's still in a position of tremendous amount of power. They're in a better position than something like Citigroup, if I'm being honest. Citigroup has a lot of, speaking of which, counterparty risk, right? Counterparty risk with Voyager. Remember the Voyager video? So yeah, Citigroup has a bunch of counterparty risk. I talked about that in the Voyager video. Huh? You have to think about that. All right, so capital mindset, thoughts on Morgan Stanley. Like Morgan Stanley. Morgan Stanley is a cool company. And they bought E-Trade. Now, I had exposure to Morgan. Well, not me, but actually, yeah, I didn't have Morgan Stanley. I'm trying to remember. I didn't have Morgan Stanley. My brother had Morgan Stanley. So my brother bought Morgan Stanley, but not directly. He actually had E-Trade. He owned E-Trade, and then he got the shares that way. Kindle bullish on Amazon? Absolutely. Oh, why does it do that? Why does it just take me all the way down? It's like, no. We don't want to skip people. Okay, hold on. I think I just went too far up. Okay. What was that? I was right? Okay, so over the last 40 years, many large cap dividend stocks have been beaten the S&P 500. Do you think this can continue into the future, or has tech taken over? No. I think like this one. Yeah, this one. I already, yeah. I'm bullish on Amazon because of Kindle. See, my wife's looking out for you, bacon. She's like, you skipped bacon. I was like, no, I covered bacon's comment. All right, so over the last 40 years, many large cap dividend stocks. So I think that, it just depends on the company that we're really talking about. It's not that like tech as a whole, everything is technology. So people, when they say tech, it's like everything's tech. Depends on the time frame that you're looking at. It's technology, right? All products are technology. What? Like they exist in nature. We pluck Tide laundry detergent from the trees. I'm just being like cheeky there, but you know what I mean? Like where do we get Tide laundry detergent? Well, it's technology, right? And we have to innovate in order to produce better and better products. I know what you mean though. So I know I'm being like facetious there, or cheeky, you could say, but yeah, like something like Google, Amazon, those kinds of companies, Netflix, Facebook, or Meta at this point, or any of the other SaaS businesses, they'll have their day in the sun. It just depends on what company they were really talking about, whether or not they'll do well or not. And just because they pay dividend or not pay dividend, remember, dividend is just a capital allocation strategy. It has nothing to do with really anything. However, it is at times a superior capital allocation strategy, and that's what really matters, is whether or not they're doing a superior version of capital allocation or an inferior version. So, yeah. Why does POS, Jeremy LaFufu, keep getting thousands of views after all his stocks are down 50 to 90%? I think because the people like him. I don't know. The people like him, and they continue to hold faith in whatever it is that he's doing. In reality, the answer is I don't know. If an almighty forced you to invest all your money in one of these two countries' indexes for the next 35 years, which two would you choose? Geez. Okay, part of me wants to say Spain because they're already like down at the floor, and then France is kind of like going down there soon. but from my discussions I've had with French people, but like France, some might say there's a little bit of more resilience in France. There's a little bit more hope in France that things could maybe change. But you gave me two things, so I'll just choose Spain because I'm feeling risky. Right, I'm going against the curve. Oh, I recommended this last live stream, The Toyota Way. It's a good book. Yep, this is the one. Capital Mindset. As a meta shareholder, I did my due diligence and got a Quest 2 Half-Life Alyx is sweet. Hey, no, and it's good, right? So I think the future of the metaverse is more open than what people think. So Capital Mindset. Chase Prime Plan will get you discounts on auto loans and mortgages. Yeah, the same kind of thing, but no credit card reward bumps. That's my biggest problem. So it's not something that is unique, right? So I wish that they would do something that's really unique to that, which unfortunately not. But I think that Chase doesn't. It's almost like they don't need to. And then Bank of America is trying to be competitive in some capacity, so they're trying that. And I think Bank of America is more competitive in that category of consumer, the people who have. But the thing is, I think Bank of America should sweeten the deal. So make tiers that are in the reward system. Make tiers that are a little bit higher too, so that you get some other things. I know that Chase has. Well, I don't know if they still have that program where you could have gotten the Palladium card, which they don't call it anymore. I think they call it the JPM card, which is, I guess, a flex, if anything. But it's just a Chase Sapphire Reserve card at the end of the day, which is the funniest thing. But they make such a big deal about it. Do you ever use perpetual growth for your terminal value and your DCFs? Why or why not? No, yeah, I do. So the reason why I do is it's sometimes, depending on what circumstances I'm in, it's better than making a sheer assumption 10 years down the road what multiple it's going to be trading at. It's kind of presumptuous there. Polestar. Oh, they're changing the ticker symbol? That's pretty cool. Thinking about adding more to my LYB position at all? Yeah, I am actually. Well, I am going to be. I'm reinvesting the special dividend, and I'm reinvesting any dividends I've received thus far. So it's pretty awesome on that front. So I'm basically getting better yields now. No, I did not watch Zuck showing off the prototypes, but I should. Yeah, exactly. You know what I was talking about. 30 cents a gallon. Wow, that's crazy. Think Zuckerberg pulled money out of virtual reality headset stuff because it was going nowhere? LOL. Not necessarily. You're probably talking about the Oculus, but no, not necessarily. He was actually just showing it off. So, but it could be like a specific project within it. Yeah, I don't agree with the new bank. Kaisa, what do you think about new bank? Yeah, the Brazilian bank. What do you think about it?
I know the Brazilians really like it.
Brazilians really like it. Any other things?
I just see people very excited about it, and I think they use AWS. I think they're expanding in a lot of countries, right?
Yeah, maybe, but I don't know. So one other thing I want to actually say about oil stocks is you probably been seeing legislation to potentially ban exportation. That's another thing that's actually kind of putting a little bit of distress in some of them, but yeah. BlackRock, Blackstone, Berkshire, which one you putting money for the rest of your life? Okay, the thing is Berkshire is going to be that bedrock, the one that's not going to pretty much go anywhere for pretty much sure, but I'd probably say Blackstone. I choose Blackstone. Prices in stocks seem pretty resilient for now. Maybe we get another leg lower, but I think it's going to be tough for stocks to go much lower. Generally, thoughts? I mean, you know my thoughts. My thoughts are this is where I'm actually starting to, where I have been already. It's already been a while now, but I think it's been a month, like something like that. That I've been deciding to accumulate stocks, right? A little bit more aggressively here and there, a little bit more aggressively than before. Not a little bit, actually. I guess especially with that GPN move, that was pretty aggressive. But as cash kind of comes in, I'm going to be a little bit more aggressive. Kind of still maintaining similar cash pile, but no, actually, I think, yeah, now it's actually pretty much coming down a bit, but I'm deploying a little bit more aggressively. I'm comfortable with where the market's kind of at right now. I follow a simple strategy: accumulate assets at prices I like, and that's it. Simple. But yeah, I don't know. I'm not going to say when the bottom is, but I'll have a fun, like, right, like if we say like it's, you know, uh, completely throwing out a random month, August. Oh, you see, cool. August is the bottom, guys. There you go. Now if it happens, like, that'll be hilarious. Like, when did I get into stocks interest wise? So initially, probably when I was pretty young, I got interested. Like, I kind of just told the story about the McDonald's one. That was one of my earlier experience, but I was a child. I was like middle school. In reality, the bug started to happen in my high school career. My high school career, it really like stuck to me. And then university, I was already kind of really hooked on it. I was pursuing other types of um, uh, degrees, which was funny. And I technically, again, I could still go back and actually just finish that degree, but I'm not, because that's going to be a waste of my time. And yeah, it's pretty much, I guess, in terms of time, I'd say probably really strong 2011 was probably like when I really got peaked interest. Not peaked, sorry. When I started, like, it's the bug started, you could say. Don't forget to like the video. Oh yeah, like the video if you like this video. I always forget to. I'm a terrible salesman with capital mindset. I really am. I like, for example, you know, look at the thumbnails. I do that for fun sometimes, like, and I try to do sometimes experiments to see what happens if I change this. And Strongman tells me all the time, like, hey, you just got to put a certain person with phallic objects in the thumbnail, and then he gets the views. And I was like, yeah. What question was skipped, Lars? I apologize. What question was skipped?
No, I'm not talking about that.
Which one?
Oh, no, I don't know. I'm assuming he's talking about.
It's probably because it went down on me. Capital mindset. If you could only invest in one sector for the rest of your life, what would be? Banks, oil, semiconductors. Oh, the whole sector. Like, I'm not okay. Banks or semiconductors. I'm gonna eliminate oil from that. Banks or semiconductors. As a whole, and I keep reinvesting as new entities pop up, probably semiconductors. How about that? But banks is like really close. It's a business that will be here for a long time. Probably my entire life for sure. Trying to see this. I already answered that question. TTCF. Oh, do you guys check the joke at the end of the last video? I said that Voyager Digital is going to get into vegan blockchain stuff. Yay, thanks, Mrs. Mindset. Now, yeah. Caipirinhas, or no, capybaras, right, Tyson? Capybaras. If an almighty force forced you to invest all your money in one of these two countries' indexes, was this the question that I skipped? No, I said Spain, because I felt risky. Thoughts on Japanese economy? I hear the future is looking grim. Yes, it is looking grim. Absolutely. How much do you expect Meta to grow annually for the next 10 years on average? Conservatively, I'd say probably like 10%, 12%. Aggressively, closer to 20-ish%. So that's the range. But maybe like 15%, 13%, 12%. Thoughts on foregoing an online savings account and storing the cash in the short-term corporate bond ETFs? No. Exposure to interest rates. Interest rates are higher, and it's where banks would put my savings accounts. No, because the thing is, if depending on the duration of those bonds, you can suffer capital loss. So you got to be careful with that. I would say, there's very few things, and I think, for example, I'm pretty sure a person cannot get in trouble for saying this, because as financial advice, it is quite literally, legally speaking, something that the government forces banks to put them as pristine collateral. But you can create an account if you're an American, for sure, but I don't know if you're a foreigner. But if you're an American, for sure, you can do this. You can create an account at treasurydirect.gov, which is our sponsor here today. Treasurydirect.gov. So you heard it here, folks. The government is our sponsor. And you type, no, I'm just kidding. But be very careful with the website. So I have oh gosh, it's an old video now, so I don't know which one to point you to, but be careful which one you go to, because there's a lot of scam websites on treasurydirect.gov. You can link your bank account there, and you can purchase and bid on various bond entities or bond instruments, debt instruments of the government, and of any duration, really. And then so there you can probably select some short-term duration bonds if that's what you're really looking for as a savings, something that you don't look to spend, and you want to keep it on a short duration, right? So you want to keep it on a short duration, get that interest, and basically it can leave your bank account every month, and then it returns whenever they pay it back. But yeah, it's as risk-free as they can get, and government says it's risk-free, so there you go. If you did it into a bond ETF, you'd have to contend with the fact that, well, you're hoping that rates go down in order for you to keep your capital, so you can sell that ETF. Depending on the strategy of the bond ETF, I don't really know which one specifically you're talking about, but if it's a long duration bond ETF, then yeah, it's going to suffer some capital losses if rates go up, but you should actually experience some capital gains if rates go down. So yeah, very rare moment of, it's not really financial advice, but like, I'd say that that's better. Yeah, you can see like there's different bank accounts that are offering decent interest rate, depending on like how long you really plan on locking up that money. But you can like, we were discussing this. I was discussing this with Cole, who works at a bank, and he was talking about CDs, and I showed him. He didn't know. He was like, "Well, what are these CDs for?" It's like, "Well, yeah, look, they lock your money up for this duration. They give you this percentage, and they go around and they buy up, a bond for that equal duration, and the yield is higher, and they pocket the difference. It's free money." Fabio, could you share how, in your opinion, should one value a bank? There's specific key metrics, perhaps. Price to book is one. But the thing is, price to book, you have to use it with a grain of salt. It's really, you got to get down in the numbers and kind of figure out what kind of assets do they own, what kind of conditions would benefit those assets, hinder those assets, cause asset write-offs, etc. Just so everyone knows, by the way, I am going to finish this stream soon, but I'm seeing that I'm catching up actually to the questions, so we're all good. Thoughts on RSP, SP 500 equal weight ETF versus SPY? Do you view equal weighting as a positive? No, but the thing is, because you don't want to punish winners, and equal weighting presumably punishes winners. So market cap weighted should be better over time, because in theory, like what's basically going on is it's self-cleaning, it's self-cleansing constantly, and then that's what you would prefer. What is your biggest investment mistake? Monetarily speaking, probably it's always the playing with the soap mistake. Playing with the soap is like something you say like, okay, well, you do something that you shouldn't probably have done. You should have just like let it go, and then it would have performed better. And that would probably have been monetarily speaking, more recent memory. Well, Occidental Petroleum is one where I sold too early. Microsoft, sold that one too early in hindsight. Because like you see, like as a total loss, let's take a look at an example. So Gazprom, I pretty much wrote off as a total loss. I haven't really spoken to the bank as far as getting the shares inside of Russia, but I can probably figure out if I can do that. And I actually think they would tell me I can't do that, but regardless, remember that with Gazprom, if you actually take a look at the videos, you can look at the content library. There was a video where it was the week before I repurchased Gazprom, saying how I sold Gazprom. And I made a really good profit. And this was actually prior to the official invasion. This was, I think, 2 days before the invasion of Ukraine. And then so after that, I think a week later, I redid a new video, in which case I explained why I was re-entering Gazprom. Basically, I was able to buy up all the shares I had sold, and then at a much deeper discount than when I originally sold it. Okay, so, and I basically was, having no money. But that money, if I don't do anything else and I don't transfer the shares, it's going to be basically wiped out. So that won't, but in reality, it just basically reduced from my gains. If I wipe it out completely, I can just deduct it from the gains that I had. So it's not really that bad. So in reality, it's more playing with the SOAP mistakes. So if you're buying individual stocks to outpace the market, shouldn't BRKB be a flop in the future based on return? I mean, it's going to be harder because law of large numbers. You see, I can't say that for you, due diligence, but I'm buying Meta. I've been buying Meta. I actually purchased more Meta yesterday for capital mindset. So yeah. India, interesting prospects, dangerous because you got to understand the market. Other than the rapidly growing population, what else makes Japan scary economically? Oh, aging. I heard for some reason my brain went growing population. It's not that it's scary. It's that no, they have good businesses. They really do have good businesses. I don't think they're that scary as people think. It's just that it's still up in the air what it is that we're doing ends with. There's a lot of theories, right? What I'm seeing is the data is more supporting the fact that it just leads to slower growth. And that's about it. And then that could lead to declining standards of living, and then the rise of different levels of political, because politics is a macroeconomic risk. Politics at the end is a risk, because if the country where you live decides, to example, to take drastic action and seize assets, okay, then all your investments, forget it. There's no rules. There's nothing I would ever be able to say that would help you in terms of information. You're screwed. But well, what gets a country to that point is the question, right? And that's where policies can kind of matter, and that's mainly. But you could say that Japan's culture wouldn't allow for that. Yeah, you could say that, but yeah, all in all, that's kind of a more nuanced answer. The topic industry scarring from before. Oh yeah, industry scarring. So crypto falling victim to this with everything. Yes, it is absolutely capable of falling victim to that, and that probably would happen. So even if, for example, let's say hypothetically, let's say Bitcoin is great and Ethereum's great, the others are going to be the ones that cause the scarring, and then everyone's going to lump Bitcoin and Ethereum. Like if we say in a hypothetical world where Ethereum and Bitcoin are really good, and let's say that is a statement of fact that they're the best. Well, if that's the case, you could still see them get scarred because the other ones were bad. Okay, so you see what I'm saying? Do you still have confidence? Yeah, no, absolutely. No, but this is normal. This is an adaptation. So they need to actually make the company more efficient. You need to do this over time. If you look at it from the perspective that the company is trying to lean out the systems, it's fine. It's fine. What I'm looking for is the story changing? Is the fundamentals changing in terms of their ability to continue to create content that is good? I want them to become more efficient at that. I've already expressed my opinions on those. It's different strategies they can employ. And that as long as they continue to kind of execute and maintain a decent balance sheet, which, for now, it'll still remain at the size it is. I'm not really planning on, adding more. If, for example, it dropped a lot, I'd be comfortable actually with adding more, but keeping it within that portfolio position size of about 7-ish% where it is. So, yeah. That's pretty much what I thought on that. And capital markets, I believe, bond ETFs, like the corporate bonds are less than 1 year. But the thing is, they're turning it over. They're because it's an ETF. So yeah, but like you're talking about the yield maybe because depends on what it depends on their specific strategy. But yeah, if it's short duration, you won't be as exposed. So short duration ETFs, you won't be as exposed. Like TLT will be absolutely hammered if rates go up a lot. And then TLT will also be doing great because it's 20-year plus. What price would you buy Google right now, Fabio? I don't know, actually. Geez, I have to do a new Google video. It has to be an update. And then I can explore. I would wait for a Google split, then they're, okay, yeah. I don't think so. Remember, they nuked an entire country. I said that in the video. They basically nuked an entire country, Russia. And so that number everyone was kind of hyping on. So Amazon was worth 122 before the split. Yes. I mean, look, splits shouldn't really affect my opinion on it, but I see what you're saying though, because Could be that like that was like a hype moment, and the hype moment passes, and people kind of just sell it down. Now that I've been Snyder pilled, given interest rates follow growth, is this why Japan has uber low rates? Bingo. Bingo. Yes. 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 Actually, you do well, I appreciate it more because when I was back in my finance degree and I took the class of advanced topics, I believe my professor was Snyder pilled because he was hammering in that fact. I guess most people, they weren't that passionate about finance or that class. And it was the harder class of the university, but me and him, we had a blast. I became really good friends with that professor, and yeah, he was. I'm pretty sure, looking back, I could probably definitely contact him and ask him, "Hey, were you Snyder pilled that whole time?" But yeah, I'm pretty sure he is. Kevin Mine says, "In the law of large numbers, that larger a sample size is, closer the result will be to the true mean." My former stint as yeah, technically, but when we're talking about it, is the size of the company. Well, actually, you could say that basically because Berkshire Hathaway is that large, it's so large that it will encompass the average, which basically it's just going to be the average, which is the S&P 500. So yeah, no, it does. Thank you. Yeah, if you're not subscribed, subscribe. See, I'm trying to be a better salesman of Capital Mindset. There we go. I am here. I am also here, and you are here. We are both here. Is that philosophical or is that a different thing? Fabio, if someone wanted your knowledge, what is the path they would need to take in college? What career path? Please be as detailed as possible. Thanks. Well, I'll just tell you what I did. I studied finance and accounting, and you start working as much as possible, start learning as much as possible, and take your classes more seriously than your peers. Try to get your professors who work in their industries, get to know them, talk to them as much as possible. Try to be likable, get them to like you, and then they'll share some things with you, right? They'll talk to you more. They'll give you little nuggets of information, and maybe they'll invite you to go out and eat and meet someone that works in that industry. Also, put yourself out there as much as possible, because that's where you're going to learn more. I've noticed, like, especially towards the later end of my academic career, was how many opportunities there are for people, but they just don't take advantage of it, and they just really don't, and it's kind of unfortunate. There were events that they would host with the whatevers, the executive. It's always be a lot of executives, and you'd have all the people going there for the extra credit, and they got their paper signed, they're out of there. I was like, what? And then there's only like 3 people left, and so it basically, and sometimes like a one-on-one. And I was like, what the heck? So you'd be able to have one-on-ones with these insane people, connect with them on LinkedIn, etc. Like, all that's good. So, and then as far as like then career path, there's so many different ways, man. There's so many different ways. Like, you could go become an analyst at JP Morgan. You could find a, small private fund that wants to give you a chance. Whole thing. Like, there's so many different paths. When you're young, there's like, it's all out there. Even when you're older, like, because I keep saying the story of that, my friend's mom who became a doctor at 40, like, so many opportunities out there. I understand looking at fundamentals for long-term investing, but do you ever swing? Yeah, I actually do, occasionally for fun, but like, a lot of times by accident, but yeah. Top 4 value plays in your opinion, value plays right now in your opinion, Fabio. The thing is, I'm going to transition probably over to some industrials, like we're looking at some industrials. But value plays, MPW looks like a decent value. Well, ones that I'm buying. How about that? Let's just start with ones I'm buying, not the ones on my watch list. Okay, the ones that I bought, but you see, like, then I'm biased. Okay, no. Let's avoid the ones that I'm buying, because those are obvious. If I'm buying them, I think they're values, right? And so just look at the aggression at which I'm buying, right? So the ones on my watch list, like, which ones am I seeing that are decent values? Okay, that I haven't bought yet, but I'm like, they look pretty good. So I'd say that some of the REITs look pretty good. So, like, yeah, I'll say MPW looks decently good. I got to do some more research on the risk profile of their tenants. But if there isn't really risk there, then my gosh, the market's pricing in some risk that's not there. Okay, that's the key. okay, some other stocks that I have on my watch list. Align Technologies looks kind of interesting relative to the growth profile of the business. PayPal looks pretty good. I gotta say, I can't lie. PayPal looks pretty good now. And I know, like, at 90, people thought it looked good. I was like, 80, 70, looks pretty good. Looks pretty good. What's PayPal at? I think last time I checked, it was like 70 or close to 70. Let me see this. I wish I was a computer that I could just look up and have the ticker symbol. Augmented reality. That's what we need, glasses. So like touch in. I'm like 73. Yeah. So it's close there. So like 73. Okay, it's starting to get there, man. It's starting to get there. So, not starting to get there. I'm thinking like it's relative to growth. It's pretty good. It's pretty good. Walgreens is even down to like 40s now. Walgreens was another one that you guys remember. I used to own Walgreens. And then hindsight, we made a killing off Walgreens, and now we can almost buy it back for the same price we bought it for originally. So that's amazing. So yeah, I'd love to take another look at Walgreens and be like, can we repeat this? I don't know. The same circumstances will repeat themselves, but yeah, that would be pretty good. You kind of just make me brainstorm here, but yeah. Why do foreign markets look cheap, i.e. Poland, yield trap, high ROIC, but pays such a large dividend? Any reason for such a high payout? It could be the way that they decided their capital allocation strategy. I mean, what kind of business is this? MBR.WA. I got to understand what business this is. MBR. Oh, already put the wrong one. MBR.WA. It doesn't like to pull it up on the app. Okay, so we'll go to Google. Yeah, you see, I missed my computer now because it would be so quick to look this up. MBR.WA. Now we gotta go stock. Okay, so unless someone says what stock it is. Oh, trash waste management. Thank you. That saved me a lot. All right, so so yeah, trash waste management. I mean, that seems like it would be a cash cow. I mean, it could just be because, like, generally speaking, the market tends to have like a flight to safety thought when it comes to global economics, because, like, so for example, the dollar is the global reserve currency. That's the one that basically everything like kind of tries to fly to. People noticed this when they asked me last time about, why is the dollar going up? Well, the dollar is going up because everyone's kind of flying to it in terms of trying to acquire safety. So American companies, by extension, generate a ton of their profits in dollars. Therefore, the market's going to give them that bit of premium. So from that perspective, you kind of extend there, and you can say, okay, well, then the rest of the world looks cheaper consistently to the United States. Well, yeah, that's how it's going to be. All right, so capital mindset, aside from streaming competition and broad uncertainties from recent spinoffs, does WBD have any other concerns specific to them? No, it's the debt, man. The debt's insane. So that's the one thing. My predecessor had an obsession with Best Buy and Walmart stock back in 2017 and 2018. Very interesting obsession to have, but I think back then, if you had bought them, they did pretty good. But I don't know why Walmart, I don't understand. Walmart maybe because, it's safe, whatever, but I don't understand that one. But Best Buy was comparatively cheap. Are you worried about Brazil, Colombia right now? Yeah, I'm worried about both of them. If something bad happens to them, look at Venezuela. When something bad happens like that, it's a whole lifetime. It's a whole life, more than a lifetime. Look at Cuba. Cuba still hasn't figured their stuff out, right? Cuba won't figure their stuff out for maybe even our entire lives. So you can see how long it can take to really recover. Oh, STOR. I like STOR, Store Capital. Different strategy on real estate. PayPal at $60 billion market cap is a buy. Me, I don't know. Right now it's at $85 billion. I mean, yeah, you might want that margin. Maybe too conservative. Maybe. Absolutely maybe. But maybe no. Maybe it's the right beat to get that. All right. So I'm glad I didn't pull the trigger on them when they were at $100. Yeah, I'd agree. I know that a lot of people like them at above $100 or close to $100 because of the massive drop. And so that recency bias gets investors to say it dropped a lot. It can't really drop more. It looks cheap relatively to the recent history. We should buy it, and then that might make a mistake. So I bought PayPal at 130. Would it be a bad idea to sell now, then buy back in after? But that would be like a tax loss harvest there. But you see, I can't say yes or no because that's like almost constituting financial advice. So yeah. But like, be careful, because then the risk is, let's say the market rallies a lot, you're going to kick yourself for that, and then you're going to hate me for saying otherwise. Do you need to know finance at a high level that to buy individual stocks? It's kind of awesome that you shed light on what you look for, but it also reminds me of how clueless most people are. I would say that to be successful, you don't really need to. You can just follow some pretty basic principles and be pretty successful. Like I say, I comment this. Dividend investors, they do their thing, and as long as they're not going for yield traps and stuff like that, and they understand that, and it's a basic principle. Because let's break it down philosophically. What a dividend investor is basically doing: a dividend investor is basically looking at it from the perspective of earnings and fundamentals. At the end of the day, that's basically what they're doing, because they're looking at it from the perspective of, okay, so, and I'm not talking about the yield trap dividend investors. I'm just trying to be very distinctive there. But let's take a look at someone who wants to buy something with a safe yield. Well, what do they have to do when they look at a safe yield? Well, it forces that individual investor, and this individual investor could be from whatever walk of life, but tends to be, when I've noticed this, is that they are looking at the fundamentals more often than anything else, and because their strategy almost forces them to. So philosophically speaking, they kind of get to that point, but not being told to get to that point because of whatever reason. It's kind of like a natural thing they go to, which more often than not can lead to a more probable to be successful, but you might not see like the crazy survivorship bias that we'll see, like, okay, that one guy that put all his money into that one stock that went 10,000x times, that's survivorship bias, and you're like, oh, everyone can do that. No. So like kind of like a more broad-based successful strategy that can happen there is that version. So yeah, that's kind of my thoughts on that. You don't really need to, but it does help. And then I'll add this comment, you don't need dividends to be successful. Absolutely. Yes, networking is most important. Oh, that's not for me. Okay, so thoughts on changing German funds? Yeah, it's pretty juicy right now. I'd say it's pretty juicy right now. Someone already asked that, but yeah, it's pretty juicy. Oh, internships for high school students? No, not really, unfortunately. So if you're in high school, you gotta wait. Thoughts on chances of Jeremy Finance Education possibly filing for bankruptcy? He lost way too much earns on YouTube and is even struggling to sell his house. Dude, maybe, and that will be poetic. All right, guys, I'm gonna have to start wrapping up because I'm still on vacation, but I probably won't be attending Strongman's live stream. I'll see if I can, but no promises on that. And there's a video coming out tomorrow that's already pre-recorded, so just be aware of that. So it's not going to be it's not filmed tomorrow. It's not, but yeah. PayPal still has a PE ratio of 5. Looks suspended to me. Maybe I'm missing something. If I took a look at it right now, I'd probably kind of be able to color that on a little bit more. Yep, I started buying PayPal mid 80s, even though so I think now it's a lot better. Okay, if I remember, I'd have to go actually check out my old video. I actually do use my old videos to kind of find out what it is I thought back then. By the way, it's not only you guys that use my videos. Sometimes I use my videos too because I can't remember everything. Thank you. I'm going to be back in the game on Monday. So I bet Jeremy's spending and losing more money than he is. Yeah, he probably is. Thank you. Oh, thank you. Yes. There you go. You see, I'm a bad sales guy for my own streams. Throughout the whole stream, I wasn't even the first one to say that, and that's bad. I should be the one saying, "Hey guys, like the stream," and one of the first things I should be saying, but I don't. But yeah, if I can, I'll make it, but I don't know if I can. All right, last question. All right, what would you consider fundamentals? Please describe a definition. Could you please do a video explaining what to look into? Yeah, I can do that. R2D2. I can do that. Well, I mean, technically I do that in almost every video, but yeah, I'm gonna plan on doing like a video similar to that though. All right, guys, have a good one. I'll see you guys in the next one.